Today is Thursday, October 25th, 2018. It is the fourth quarter. It's, I think it's my favorite time of year. I mean, the spring's great too, summer's nice, but fourth quarter, game's on the line. It's bringing the year to a close and a great chance for us, both personally and professionally, to do an assessment, see where we're at, and see what it's going to take for us to finalize or achieve whatever goals we'd set out to for the year. So the purpose of today's call is to do a Q3 review, as well as kind of a year-to-date review and an assessment of what it is we're trying to do to close out 2018 across B-Labs Ventures. And as you can see here from the screen, all of the wonderful companies that we have in our portfolio with our amazing internal agency engine, Blue Liner, as kind of the heart and soul and central point that helps these 5 wonderful startups to kind of build their brands and establish presence in their respective markets. As we know, what B-Labs is, a venture builder or a venture studio, whatever you want to call it. Differentiate us from a traditional accelerator in that we take an operationally deep partnership approach and mentality with the companies that we choose to partner with. So these aren't just investments we made, sprinkling around some money and different kinds of expertise here and there. We take each of these businesses as our own, and we partner with the co-founders in those cases where those co-founders exist, and where these ideas were homegrown, as are several of the ventures here. Again, we just take it all that much more seriously as our own business. And it's great for the Blue Liner team, for the staff, the agency staff, which stands at about 30 as we speak, to have this, what I call this, it's a kind of a symbiotic staffing model, right, where we have pure pay clients that pay us to do the great services we do across design, marketing, and tech arenas. And at the same time, everyone in the agency team spends at least a third of their time to a quarter of their time at the low end working on one of the portfolio ventures. So you're working on a startup, you're working in a startup, and at the same time, you're more of a technical consultant to a pure paying client. And honestly, I believe the attitude should be the same towards both types of work. We should treat clients like we're part of their business, and we're partners with them and show them that we care about their companies. And at the same time, we need to treat our own internal ventures with objectivity, with kind of a technical approach, and make sure we can guide our own businesses in an objective fashion. I think that's an important part of succeeding as an entrepreneur, is to be able to kind of step back and take an objective look and an assessment at your market, at your challenges, at your team, at your competition. So just a bit of an overview there. And as you could see, we've got these 5 companies here in these sessions, as most of you have been part of them in the past. I'm going to take mostly a financial approach in terms of looking at the numbers across each of these businesses, but I'm going to try to sprinkle in today a little bit of a thought process and a vision for what we're looking at for 2019, and what some of the key highlights are for each of these companies is as well. So let's get started without further ado. Start with the overall picture of B-Labs. And again, how we approach this is we look at the revenue across all the companies. Again, noted, just going back to this screen, a number of these companies are pre-revenue, right? KidCoin, 7 Pillars, has a little bit of revenue, not much. Advocator pre-revenue, and TimeBug essentially pre-revenue. So the only startup in here that's really not a startup anymore, it's a JustCo, it's a bit more of a mature young business, has some revenue, and then obviously the agency has some revenue. So the revenue figures for a number of these are very low to zero, because we're still in the process of launching these products into the marketplace. So we do look here at total revenue across all co's or companies by quarter, and then we projecting the fourth quarter, which we're now in 2018. So you can see a total 2018, again, projection, because we're not sure on the fourth quarter 100% of close to 1.7, a little over 1.6 million, which is up slightly over last year by about 100,000. And then we look at weighted revenue across all companies, which is essentially the total revenue multiplied by our percentage ownership in each one. So for example, if Adjustco makes $1 million, we count that as total revenue of $1 million, but then B Labs 13% of $1 million, which is 130,000, that's going to be what shows up in the weighted revenue, which is why the numbers are smaller there for weighted revenue. You can see weighted expenses and then an overall weighted income. So not too dissimilar from 2018's projection to what 2017's actual was there. But then we also have these additional expenses, and this is just part of the B Labs overall operating expense, which is basically what it takes for us to kind of manage and guide and properly support the different portfolio companies. We have a whole, let's say, finance function, for example, with Zara, our CFO, that helps to oversee and manages the actual P&L and the QuickBooks and all the bookkeeping, as well as the accounting for all the different ventures. And then a big part of, let's say, my salary, also Zara and several others in the team, goes under the OpEx, operational expenses for B Labs now, which is why 2018, which is really the first fully funded year for B Labs, really funding started coming in around mid-2017. So we really were ramping up and creating B Labs and the structure and infrastructure in the whole first half of 2017, whereas here in 2018, we've finally gotten a chance to fully kind of unveil and even understand what that infrastructure needed to be. That's why you see the OpEx expenses a bit higher there in 2018, quite a bit. So you could see our losses, which are fully expected for a very early stage, venture builder. And we did take in a little under 1.7 million in capital in our initial round one raise, which has mostly been allocated and utilized at this point. I'm going to show how that's been generally spent. We're looking at Q1 2019 now for our next capital raise, which is going to be somewhere in the $7 to $10 million range. And it's going to be geared towards primarily, again, supporting the next level of growth for these companies, as well as possibly onboarding one or two new companies. Again, the capital raises we do in B Labs, unlike a traditional, let's say, accelerator venture fund, aren't geared towards adding tons of new companies and sprinkling our investments. Nothing wrong with that business model. It's just not our model. We're not looking to sprinkle our ownership and investments across 100 companies. Not at this stage. We want to be in the 7 to 10 company range and be operationally deep and invested in the long-term success of those companies, not just the seed funding stage and then, let half of them die off while we pick and choose the ones that we want to continue on with. For me and for our kind of premise as a business and overall philosophy, every one of these businesses is like a family member. We need to make sure and ensure their ultimate success to the best of our abilities. So that's the overall picture with Labs. And now, again, a high-level look at where some of the investment has gone into the portfolio companies. Again, remembering that we also invested in our own B Labs overall infrastructure as well, which isn't included in this pie chart. 7 Pillars and Advocator and KidCoin being the 3 highest figures here. TimeBug as well. Now, out of this 40% between TimeBug and the Advocator, the good news is with those investments, we actually completed 2 application developments. The Advocator is ready. It's been ready for a little while now. Now it's more of a challenge about how to actually market that program and product. And the TimeBug's first app of hopefully many eventually, called 2020 Life Vision, is just in a testing phase, the final stages of testing, and on the very cusp, definitely within this calendar year, of being released to the app stores, both iOS and Android app stores. So very excited about that. These investments are good investments, I believe, and ones that now we have to follow up and build and launch the marketing strategies around. whereas 7 Pillars and KidCoin are still in more of the earlier stages of development. With KidCoin, we're looking at, and again, I'll talk about this more when we dig into each company, but since we're on this investment slide, I thought it would be a good chance to also allude to the fact that with KidCoin, we are looking at the first quarter, very early in the first quarter 2019, to have a first version of the product, the hybrid mobile wallet, cryptocurrency wallet available for family finance. So that's going to be a very exciting development at a very interesting and exciting time in the blockchain and crypto space. So let's go in company by company now, spend a few minutes on each one, starting with our beloved agency Blue Liner, which is going on year 18 incredibly. This company has been around the block and has been here for a long time. It's probably, I don't have all the data, probably one of the oldest independently owned digital marketing agencies in the country, if not the world, because most of the guys that get a bit bigger get eventually acquired, and now they're part of corporate conglomerates. Again, no problem with that, but there are a lot of advantages to being more of an independent and boutique agency, and we've been able to be quite successful for some time. And here are the numbers. Total billings look like they're going to close out around a little under 1.5 million. And again, billings include third-party media, things like Google AdWords and other third-party advertising. So we do separate that out so we can see the media billing separate than just kind of pure services revenue. So total billings and then billings excluding the media is over 1 million, which is not too much different, but a little bit above, almost 100K above last year. On the net income side, should be break even to slightly profitable year here for Blue Liner. I mean, it has been a quarter in terms of Q3 of some tightening. I mean, because we had a big tranche of capital come into labs, and a part of that went into kind of funding Blue Liner as well as the other ventures, and that capital has run quite thin within Q3 specifically, the one we just finished, and now it's carrying over into Q4. So we have had to make some budgetary cuts, which is just a natural part of the business cycle. When things get tight, in order to kind of survive and thrive, we need to kind of tighten the belt up, which we've done and we're continuing to do in this quarter. So going to the top of the call when I talked about the fourth quarter being a great opportunity to assess where we're at and make some adjustments so that we can kind of win and close the year strong. That's basically one of our points of focus in the fourth quarter, is to continue leaning up where we can and where we need to in order to be efficient. And so, you could see some of that reflected here. Like, for example, right here, you could see the expenses per quarter in Blue Liner will be the lowest here in Q4, actually about 50K less than Q3. So that actually allows that to become a profitable quarter because the revenue isn't really decreasing. It's actually projected to be the best that we've had. So we're actually projecting an increase in revenue while we're able to make some budgetary cuts and actually enable the year to close out slightly profitably. So that's the Blue Liner picture for the first 3 quarters and projecting for the full year 2018. This is a bit of a breakout and a more visual view just to show how diverse our revenue streams are. I mean, the 7 Pillars model, which was naturally invented here at Blue Liner, is something that I believe agencies worldwide have their own version of how they break out their line items. But this revenue by pillar shows that we're not a one-trick pony. That we actually have skill sets across media, CRM, strategy, social media, UX, design, SEO, all the different things that we thrive at as a full-service marketing agency and with a real strong focus on digital. And you could also see that the labs portfolio companies help to drive some of the revenue in Blue Liner. So that's obviously for B Labs overall, it's kind of a wash because the money goes from one portfolio company to another. But in reality, for Blue Liner as an agency, it's very important to know that it's also getting compensated and paid even when it works on its own kind of sister or partner company work. So that's an important, and I see that as we continue to get more funding into labs and into the specific companies. KidCoin's doing its own raise now. Justco's been raising money for a long time, has raised well over $5 million in its own capital, a decent portion of which has come over to Blue Liner in terms of service revenues. Advocator also raised some of its own money and is really in the midst of doing another fundraise now. So as these companies raise their own independent money and Labs also raises this next fund, that's only going to come to benefit Blue Liner and drive a larger portion of Blue Liner's revenue to be from its Labs partners, which is part of my vision, is to see Blue Liner's billings and revenue to be close to 50-50 between pure pay clients and internal portfolio partner companies. I think that would be, this whole symbiotic, even staffing model and service model would make the most sense and be the most productive with that perfect 50-50 split. I never really want to give up the pure pay agency service. I think that keeps us sharp, keeps us on the edge. And whereas if you're doing everything you're doing is for quote unquote your own stuff, you can kind of lose sight of what may be best practice for a particular service area or industry. So I like keeping us sharp on both ends of that. And as far as overhead, you could see where some of the expenses go. Obviously, for an agency that's based on the people and the intelligence and the skill sets of people, people costs are going to be our biggest expense there. You could see between external contractors and in-house, that's the biggest. Those are the two biggest line items. The payroll tax, health insurance is pretty much most of it. And then obviously office expenses, we have some rent. We're looking at some exciting things with Blue Liner. It's been about 5 years since we've really had an active presence in the city. We've obviously redeployed our energy here in the Jersey City studio, the lab. It's a great investment, and it really allows us to kind of have more space, have more creative space and freedom here without being kind of crammed up in a small Manhattan office or a big office that is super costly. So it's been a win for us. But that being said, in early 2019, we're looking at an expansion back into Midtown in one of these kind of shared workspaces. We're looking at the assemblage, which is a very cool environment, like a WeWork, but kind of with a little more of a holistic and health and wellness vibe, and some very cool, techie, innovative companies in there. So without spending a whole lot of cash, we could offer that presence to some of our staff members that travel in from all over different parts of the tri-state area, and just give us a bit of a business development presence back in Manhattan again. I think we've been missing that, and with a growing sales staff and team and a growing focus, 2019 for Blue Liner is really focused on becoming and being a year of growth for the agency. And in order to do that, we need to make some aggressive moves. And that's looking to be one of them, to extend a presence back into New York City. So I'm excited about that, and I know a bunch of our team members are as well. So now let's look at some of the portfolio companies. We'll start with the 7 Pillars, which is really the closest connected to Blue Liner, and it's really become an extension and almost a birthed like a child out of all of the hours and hours and years of agency work. So we thank all of the people that have ever worked here, not just the current staff, as well as all of the clients we've ever had, which are hundreds, not just the current clients, for collectively working together and allowing the 7 Pillars to be kind of shaped and envisioned and born through all of that hard work and effort. And now it's really become a standalone education academy, essentially. And we have a beautiful website for it. There's a lot of different programs. We have a lot of very, very heavy interest and existing activity from major corporate clients, like our Blue Liner client, Cayman Department of Tourism, flies our 7 Pillars team in, not quarterly, but they want to move to quarterly now. It's a couple of times a year to specifically train all the top private marketers and partners on island in this methodology. So that's the power of it. We're now talking to even much larger organizations as well as corporations specifically that are looking for tailored 7 Pillars training around their specific industries. We're also building a whole library of online content to really expand in 2019 our online academy, and really taking our certification program, which is small right now, and looking to grow it with professional consultants and marketers that are looking to kind of have this as a symbol of achievement and skill. And it's not something we will give out lightly. It's going to be like going to the dojo and earning a black belt or a brown belt. We're going to make them earn it, as well as obviously our staff that's been trained in the system. So that's just a little bit of coloring about a look towards the future with 7 Pillars and some of the exciting things we have going on. And maybe I'll show the. I want to get through all the financials first, and then I might take a minute or two to showcase some of what I'm describing here, and show you some of the web properties and products that each of the companies is working on. But numbers are numbers, and it's the bottom line. So let's take a look. For 2018, look to be closing out. We do have some sales here, because now even within Blue Liner, the clients are paying a portion of their funding or their fees to Blue Liner go to 7 Pillars training. So 7 Pillars are starting to integrate into Blue Liner as an agency service line item, and that's our hope for other agencies as well. So there is a bit of revenue there, which is decent little first year. Obviously, the major vision with 7 Pillars as we build our platforms and the education is to then launch our application, the Marketing Matrix application, which is in development as we speak. We're probably looking at the middle of next year, though, before that's going to even be available. So it's probably going to take almost all of 2019 to get that product into market, that technology as a SaaS kind of marketing planning, marketing automation software, and then to start actually generating revenue from the product side. So right now all the revenue is still on a kind of service and training and pure education side, which is still good because it gets the brand out. And you could see our expenses have been rather managed tightly, not too much spending, so not too much of a negative or net income loss there on 7 Pillars. So I think that one's been very efficient and continues to have a tremendous amount of promise. Let's switch over into TimeBug. And again, I definitely want to show some of the wonderful things we're doing and give you a good sneak peek of the application, as well as the book that is on the market and available now on Amazon. So let's take a look. Again, TimeBug, as just a reminder, is a quantified self, personal wellness, self-help, personal development company. And our goal is to help people individually understand what their life vision is, or if they don't understand it, to help meditate on it and create one. And not just create some kind of far-fetched, idealistic vision, but to then actually create a practical methodology, which is what TimeBug is and has at its core, where people could create a plan. Just like we create business plans, we need to be creating life plans. And we have our annual goals, but that needs to be broken down into quarterly, into monthly, into weekly, into daily. And that's the type of system, personal development system, that TimeBug has at its core. And the 2020 Life Vision application is going to be our first kind of manifestation of that, along with the 2020 Life Vision book. So very, very proud of what we've done there, and really the best is yet to come, is really about to come for TimeBug. But until that time, this is where you see what it takes to get there. This is when you see what it takes to get there, and it's the expenses, and it's the investment, the $135,000 here, or $195,000 in overall expenditures for 2018 to largely R&D related. A lot of that R&D got kind of put into kind of OpEx here, but it was really payroll of the developers and the people that were creating the application, the book, and the other IP for the 2020 Life Vision app. So, yep, quite a major hit here because, completely pre-revenue and all on the expense side, which is, completely natural and expected in a pure startup tech app. So again, this is the behind the scenes. This is, kind of building the foundation. And within the next 60 days here, this fourth quarter, a major goal of mine and ours is to complete and successfully launch the TimeBug application. We already did a pilot a couple of years ago with the same content that's now driving the book and the app. And just based off of that pilot, we got over 20,000 fans, followers, likes, email subscribers, Twitter followers, and that's all been there as an asset for us, proving that people are very interested in this type of content, these types of products. And we've continued to kind of keep that market slightly informed, but now we're kind of ramping up our social media, our content marketing, our CRM to re-engage those folks, as well as add, a new group, of fans and potential paying customers. Although it is a freemium app, there'll be a free version, and then at a certain level, people will be required to pay in order to kind of get, the full benefits. So very excited about what we're doing there, and we'll kind of keep you posted on the application when it launches. So, the Advocator. When I talk about the portfolio and all the different companies and the things we're doing, obviously it depends on who you're talking to, right, as far as what they're going to be interested in. But the Advocator always gets people's attention because, especially, for people here, folks in the States, they're frustrated. They're frustrated with the political climate. They're frustrated with the, seemingly never-ending gridlock, in D.C. and at different levels. They're frustrated with just a lot of the KPIs, so to speak, for our country, for the U.S., in terms of education, in terms of health, in terms of just, even public safety. We can get into all the different issues that we can gripe about. And it's not that there's not some positives, but there's a lot of negative things and downward trending vibes, and realities that we're facing. So people really like the idea that the Advocator could allow people to crowdfund and connect activists and coalitions with lobbyists that can help them affect real change. So it's a potentially very impactful venture. It's one we've spent now as Blue Liner, as you can see, as Labs and Blue Liner, the highest level of our investment has gone into this venture. Let's take a look at the numbers, and then I'll talk a little bit more about the plans going forward. Again, completely pre-revenue, and we've really finished the development of the application in the first couple of quarters there, which is why you see Q3 didn't have a lot of spending. And for Q4, we're not projecting any spending because, frankly, the bit of capital that we raised independently for the Advocator, which was its own cash, as well as Blue Liner's investment and B Lab's investment commitment, has expired and finished at the end of Q2. So we're in a kind of a discussion, strategizing phase with the co-founders and kind of the somewhat board there, which is essentially B Labs plus two co-founders, David and Darlene Richardson. And we have some meetings coming up here in the fourth quarter to determine what's the way forward, because it's not costing anyone, so it's a good thing it's not burning a lot of capital. But we really, now with the product fully done and built, and as you can see, all the spending in 2017 and 18 there, you see at the bottom here, 127,000 in 2017, another 70K in 2018. That's all basically B Labs generated or initiated funding. Everyone's now eager to see this product, which is complete and ready, enter the marketplace. And that's where we need to talk about either raising some more capital to kind of really fund a marketing strategy or some other major strategic partnerships that can help us do that. But one way or another, there needs to be, kind of strong leadership and a strong marketing go-to-market strategy. I would say, frankly, at the moment that doesn't exist, which is where, the partners or the founders and myself have a couple of meetings ahead of us in this quarter to say we're in a good place because we have a product, but now it's time to activate. How are we going to do that? And so exciting potential times ahead, and I'll keep everyone posted on what we determine is the chosen way forward, or the chosen way to enter the market and start to get a bunch of lobbyists on board, a bunch of activists, and that's not really the right word. It's really just basically coalitions of concerned citizens that are looking to affect or impact a local or national law of some kind that could be for the betterment of the greater good. So it's again a very exciting and potentially socially impacting venture, starting in the States and then hopefully going into other countries, but one that needs some capital and needs a very active strategy and some strong leadership to bring a great idea and a great product into an actually revenue-generating product. So having invested a major portion of Lab's funding into the Advocator, we're very hopeful to see that come to fruition and be determined strategy-wise in the fourth quarter here. Okay, let's move on to Adjustco, which really was the pilot company and venture of the entire B Labs portfolio. It's where Blue Liner really started to make a full-time commitment to saying we're going to take a piece of equity and we're going to barter with Jason Stile, who's the initial founder, and then I came on as a co-founder, and then Blue Liner came in essentially as a co-founding agency and helped build this brand and company from scratch. It's been a great journey. I mean, it's been a 7-year journey since 2011 when Jason first approached me, and 2013 since we first entered the market. So now we've finished, this would be going on year 6. Tremendous amount of assets, over 30 different patents across multiple countries, just with the JustLock, the initial product, not to mention there's 4 new products that we've gotten involved in and have some kind of either IP ownership or licensing distribution exclusive deals with as well. In past webcasts here, I've actually covered and gone into detail on all those. I'm going to focus more on financials and kind of a going forward strategy for Adjustco today, because as a business reaches a certain level of maturity after all the investment and all the assets and all the wins we've had, I mean, being in every Home Depot in the country, we just also landed Tractor Supply account. Kudos to Jason and the team, and Hillman, our U.S. distribution partner, for pitching that and continuing to grind until we've actually successfully gotten that order, which is another 1,700 stores. So we're talking about over 10,000 DIY hardware stores, worldwide now carrying our brands and our product. And that only opens doors with all those same distribution channels and buyers for what's next and whatever else we have to offer, which is now multiple products, not just a JustLock. So with that all said and with all that in place, let's take a look at the numbers, and then we'll talk about going forward, what the 2019 vision might look like for Adjustco. So you could see 2018 looks like on overall revenue is going to close out at around 600,000. Again, this is all Adjustlock because the new products are all just coming out of R&D and aren't really generating revenue yet. So it's going to be kind of flat, kind of similar to what 2017 was. Yeah, I mean, the new Tractor Supply and also Fastenal, which is a major MRO, maintenance, repair, and operations account, a major account. None of that's going to be reflected here. That's all going to kind of go into the 2019 growth, which I do believe is going to, eclipse $1 million at least there in 2019. So I do believe we've got a year ahead of us, which will be, on paper, a nice year of growth. And in reality, now we've had offers and interest before in Adjustco and Adjustlock from some major players. At the time, we didn't actively pursue it. This is going over a couple of years back now. Right now, though, we're more open to it, and we're actually interested. There's some new discussions that won't get into detail on that have started to happen, both externally and internally, where we think with the new products and the expanded product line and the expanded distribution channels with new accounts like Tractor Supply, I mean, it takes a lot of effort, 2-3 years to get into some of these doors. So as we're doing that, we're kind of paving the way for this full supply chain with IP product, with a brand that's getting more kind of top of mind with key industry players. And that only increases the value of what this company can do as a platform going forward. And so 2019 is a year that Jason and I and other key shareholders are looking to at least be open to what an exit might look like, which means we're preparing, not just our financials, but our assets and our kind of overall pitch deck, so to speak. And with a lot of great relationships in the industry with people that can sit down with us or get us in front of, the big hedge funds and other kind of conglomerates and major players in this industry that love IP and love brands, new brands, fresh brands that they can do all kinds of things with, like a Justco. So we're still kind of a fresh face in the industry, but one that carries some good weight and one that's known for introducing innovative products only, not just run-of-the-mill kind of standard commodity items. So I'm very excited about what we've done, proud of what we've done, and proud of the role Blue Liner and B Labs has had in it, and believe that 2019 is the year where, A, we're going to be profitable because we're really leaning up on a lot of expenses, and we're growing. And it's a year that I do believe we're going to get some offers. And then we'll evaluate those offers. And if they're good, there may be B Labs' first major exit here, which is positive because as we're raising that next round of capital for Labs, if we have a good event with a Justco being sold, that could bring in $1.5 to $2 million as actual revenue into B Labs. And that really proves the model that we're looking to pursue for all of these portfolio companies. You build, and then you look to see if you can run a profitable company or potentially sell it to a larger or another entity for a strategic reason. So I'll keep everyone posted on that, obviously, as we go forward. A lot of those conversations are very highly confidential at this point, so we're not going to get into too much detail until there's some real action at the table. But I do believe that by the end of the second quarter 2019, so the first 2 quarters basically, that we will be seeing a profitable entity at a nice growth clip with some offers in hand to potentially exit. So moving forward, we'll go to KidCoin. Last and certainly not least, KidCoin really being the evolution of 401Kid, where we started many, many years back. Is now our cryptocurrency blockchain venture. And we had been spending quite a bit of money going back to the first quarter this year. It's all relative, but relative to our B Labs overall funding, we did allocate a good portion to KidCoin there. You could see it's gone down a bit, but we're continuing to spend in R&D to build our application. We spent a lot in marketing initially in the first quarter, really getting out there to major blockchain events, industry events, and just kind of putting our stake in the ground to say, we're here, and we're the kind of first in class in terms of a family finance platform, and one that's really going to help kids plan and save and understand the value of money and what it takes to earn it, how they can save it, how they can donate it. Essentially anything and everything a young person can do with their assets, and how they can utilize these tools and build this life skill and gain life lessons that help to shape their own emotional nature, their psychological nature and mentality towards life, the world, and make it a little less scary, make it a little more relatable to them, regardless of whether they have a lot of means or support from tons of family or not. One way or another, we have to kind of figure out our way in this world, don't we, as individuals and as businesses. And that's the lesson that we're teaching through this set of tools to these young kids. So I'm extremely excited and passionate about this area and believe it's a large gap in our current world. Banks schools. No one really helps these kids understand this lesson. Then it leaves it up to us as parents, which is tough, and some parents do, obviously a better job than others, but when the majority of adults, and I'm going to not even just say the States, think about worldwide, the majority of us as adults are still struggling and trying to understand how to piece it together because no one taught us. So then how are we going to teach our kids? They're going to learn by what they see, not necessarily by what we say. So again, I'm talking about qualitative things and kind of larger macro vision. But again, the numbers speak for themselves here. You could see we spent a good $250,000 on KidCoin. We also raised some capital directly into KidCoin through a token offering, which is a unique and new form of fundraising that's also controversial in some ways. Just because, a lot of people government-wise don't know how to handle it, and even investors don't know necessarily how to understand the difference between investing for equity in something versus making, let's say, a loan or a debt investment versus, in this case, something new, investing to have some tokens and a piece of currency that can be used in this platform as a utility, or as we say, utility token, and that may also be able to be tradable on an exchange somewhere, just like you would trade stocks. So is it a security or a stock, or is it a utility, or really it's potentially multiple things and hybrid. And that's kind of a new asset class, which is kind of throwing a lot of people for a loop. But at the end of the day, the good news for investors, and to the investors we have in Labs and KidCoin, as well as potential folks considering an investment in KidCoin, the good news is if you do invest in KidCoin, your tokens have utility that you can use on behalf of your family, kids, or other young people that are important in your life as either a savings vehicle for them to save and plan for the future, or even as a spending vehicle, as a form of currency that they can use to buy things, because believe it or not, cryptocurrency within the next 3 to 6 months is going to be able to be spent and utilized virtually worldwide, everywhere and anywhere, the way you can use your debit card or Visa or MasterCard or even cash. So, it is the new smart form of digital money, crypto is, and KidCoin is seeking to put its stamp on being that for kids and young people for a variety of their needs. And so if you're an investor, in KidCoin and you own it, you'll be able to utilize it in that way as a currency and as an educational tool for kids and young people in your life, as well as be able to hopefully, we're not on any exchanges yet because it's still very early, but at some point, should that happen, and there is a likelihood that it would happen, you would be able to then trade that currency. So if you invest in it and then you don't want to hold that investment anymore, you'll be able to trade out. What the price would be at that time, no one knows. I mean, we can't sit here and promise it's going to grow indefinitely, just like Google can't promise its stock is going to grow the next day, or the US government can't guarantee you that the value of a dollar versus euro is going to go up or down tomorrow. Nobody knows with these kind of assets. It is a new asset class. It's good that investors will have some option and opportunity to have liquidity and utility with cryptocurrency, which is why I'm so excited about crypto in general and KidCoin specifically, because we're building a killer application that will be available sometime in the first quarter 2019. So stay tuned. Anyone that has kids or family that are important to them should be using it. The platform should be owning at least some KidCoin that they could then distribute as allowance, birthday gifts, holiday gifts, communions, whatever it may be, or for whatever other reason, as we call it. We have a micro scholarship program where kids could get rewarded KidCoin for achieving, let's say, good grades in the classroom or good deeds in the community. So in this way, we're allowing this kind of smart form of digital money to be used as an education tool and as a reward for, basically good behavior and good deeds. So it's going to be very exciting, something every family and every kid should be using within 2019. And all of this spending you've seen here in 2018 is the foundation of that. So I believe it's an investment well worth what has been put in, and something we'll see the fruits of in the coming years. So good for KidCoin investors and good for B Labs shareholders as well. And that really brings us towards the end. I've been kind of sprinkling around the 2019 strategy through the conversation here today, but in a nutshell, and just to kind of summarize it, we have had, I believe, a very successful full first year in 2018 as B Labs. It's not over. Here in the fourth quarter, we're looking to close out strong. We've leaned up in a lot of areas so that we can basically thrive and survive, after having spent a good portion of the capital through the first 2 quarters. I think Q3 and Q4 are going to be a little bit tighter and leaner. And at the same time, the first quarter of 2019 and the first half of 2019 is going to be expansive. So it's about kind of just riding these waves of kind of contraction, expansion. And I do see us in 2019 expanding aggressively with 2 major fundraisers, KidCoin and B Labs, 2 or 3 major launches, KidCoin, Timebug's 2020 Vision, Life Vision, and The Advocator. Hopefully all 3 launching aggressively in early 2019. Then the 7 Pillars launch will be more towards the middle of the year. So 4 new tech platforms and products, all in play, all looking for market entry, penetration, and growth throughout 2019. It's going to be very exciting times. That's very good for Blue Liner because our specialty is lead generation and customer acquisition. So, having spent this last year and a half in more of a dev building phase, which is another strength of ours, but now we get to shift towards our acquisition and marketing folks who are kind of licking their chops, getting ready to promote these 4 wonderful products. Again, the Adjustco potential exit, preparation for exit, and preparation to have our first fully profitable year as Adjustco after the $5+ million we've raised and the 6+ years of building all of our great assets. So it's going to be a very exciting year for Adjustco as well. And I won't talk about what they are, but we're looking at a couple of new things to potentially add to the mix in terms of portfolio ventures. So a couple of new ventures in, a few launches, potentially 1 exit, a couple of fundraisers, and it should be a very fun year. But first and foremost, we're going to close out the last 60+ days of 2018 on a strong, strong note. I'm more excited than ever about what we're doing. We have a great, great team internally, as well as great, agency client partners. We're, by the way, landing what looks like to be the biggest business and client we've ever landed here, literally over the next 2 weeks. So I'm going to be a little hush-hush about it. I'd like to talk about things after they're, fully inked, instead of, projecting it. But, the largest client we've ever had in Blue Liner's history looks like it's about to come on. So I'll report on that, in the next update. But wishing everyone a great fourth quarter, and I'll see you again in a couple months. Peace.